Did you know that 9 out of 10 entrepreneurs fail due to simple and avoidable financial mistakes? Today, you'll discover how not to be one of them. Many entrepreneurs start with passion but ignore the basics of financial management. The result can be devastating. The first common mistake is mixing personal and business finances. This makes it impossible to correctly assess your business's profitability. If you use the same account for personal and business expenses, you'll lose control and eventually face serious issues. Keeping separate accounts is essential. It makes accounting easier and allows you to clearly see how your business is doing. The second common mistake is ignoring hidden costs. Many entrepreneurs calculate only visible expenses and forget about unforeseen costs. These include taxes, unexpected repairs, or fees you didn't initially anticipate. Always plan for a buffer to cover these events. Failing to do so might bring surprises that harm your cash flow. The third critical mistake is not establishing financial reserves. A business without reserves is vulnerable to any crisis. A financial reserve is like a life jacket during rough times. Always maintain reserves that cover at least 6 months of operating costs. The fourth mistake is not pricing correctly. Many entrepreneurs set low prices to attract customers. However, too low pricing not only reduces profit margins, but can also convey a sense of poor quality. Set prices based on costs, competition, and added value. Make sure you cover all expenses and secure a healthy profit. The fifth mistake is relying too heavily on a single client. If your business depends mainly on one customer, you're at risk. What if that client leaves or reduces their purchases? Diversify your client base to minimize this threat. The sixth common mistake is poor account receivables management. If you don't collect quickly, you'll have liquidity issues. Clearly define your payment terms from the start. Implement an efficient system for collecting invoices and avoiding delays. The seventh mistake is taking on too much debt at the beginning. Credit can be helpful, but irresponsible use is dangerous. Interest from debt can quickly consume your profits. Only borrow when absolutely necessary and with clear repayment plans. Another common mistake is ignoring the importance of cash flow. A profitable business can still fail with weak cash flow. Cash flow is vital to pay suppliers, employees, and other timely obligations. Monitor it consistently. The ninth mistake is underestimating the value of proper accounting. Many entrepreneurs think they can handle everything themselves. Hiring a professional accountant or using appropriate software is key to effective control and avoiding costly mistakes. The 10th mistake is not having a solid financial plan. Without a plan, you'll be operating blindly and improvising decisions. A financial plan should include realistic income projections, expenses, growth goals, and strategies for unforeseen situations. Finally, a serious mistake is not reinvesting in the business. Profits should be partially used to help your company grow. If you take out all the money for personal use, you'll severely limit your potential for expansion and stability. Now, have you made any of these mistakes so far? It's time to identify and correct them before it's too late. Many underestimate how much mindset influences finances. If you don't change your thinking, you'll repeat the same mistakes. Beliefs like money is bad or I'm not good with numbers sabotage your decisions without you realizing it. Start by analyzing what you think about money. Does it scare you? Does it seem dirty? Do you feel you don't deserve it? Reprogramming your mind is just as important as creating a budget. Your financial actions stem from your thoughts. It's also vital to recognize that no one knows everything. Don't be afraid to ask or surround yourself with experts. Listening to finance podcasts, watching educational videos, or reading books can drastically shift your perspective. Set clear goals. Don't just say, I want to save. Say, I'll save $100 a month for 12 months. That precision turns vague intentions into concrete plans with measurable results. Do a monthly review of your numbers. Write down what you earned, what you spent, and what was left. Don't ignore your mistakes. Learning from a bad financial month is more valuable than celebrating a good one you didn't understand. Avoid comparing your progress to other entrepreneurs. Every business has its own rhythm and context. The important thing is that you see progress compared to the previous month or year, even if it's small. Use indicators to measure financial health. Cash flow, profit margins, and return on investment are key. Not all income equals profit. You can earn a lot and still lose money if your costs are too high. Value time as a financial resource. If a task consumes hours and doesn't generate results, delegate or eliminate it. Audit your tools and platforms. Do you really need all the active subscriptions? If a tool doesn't improve your sales, organization, or analysis, it probably isn't worth the cost. Also evaluate emotional spending. Purchases driven by anxiety, guilt, or impulse can be worse than bad investments. Create weekly review habits. 10 minutes every Friday can prevent mistakes that cost thousands. Your accounting shouldn't be punishment. Make it part of your routine, like checking emails or planning your schedule. Identify patterns. If every month ends with the same cash issue, there's a structural problem. Talk to your team, if you have one. Sometimes collaborators have valuable ideas to save or increase sales. Acknowledge that money is a tool. Don't idolize it, but don't neglect it either. If you learn to manage it, money allows you to build more, help more, and live with greater peace. Learning to manage money isn't just a business skill, it's a life skill. Look for events, seminars, and conferences to meet other entrepreneurs who've faced your same challenges. Sharing experiences and hearing other perspectives can open your eyes to opportunities you hadn't considered. Consider forming an informal advisory board. It can be peers with experience who give you an objective view of your decisions. Another underappreciated aspect is financial process automation. Using technology can save you time and errors. Invest in management tools that integrate inventory, billing, collections, and financial analysis. Don't be afraid to hire external help if your financial load overwhelms you. Sometimes outsourcing is an investment, not an expense. Hold monthly financial meetings, even if it's just with yourself, to review goals, income, expenses, and action plans. Don't let routine stop you from seeing whether you're on the right track or need to adjust your strategy. Lean on key metrics: gross margin, net profitability, cash cycle, acquisition cost, customer lifetime value. These figures help you make decisions based on data, not just intuition or urgency. Remember, no one is born knowing. The best entrepreneurs are those who learn from every step, even the stumbles. Reflect on every stage of your business. What worked? What failed? What could you have done differently? These answers will help you make better decisions in the future and reduce financial risk. Don't leave your finances to chance. Constant improvisation is the enemy of growth and stability. Always have a backup plan. Businesses face unexpected situations, and being prepared can mean survival or closure. Avoid impulsive spending with business money. Be disciplined and evaluate each decision with a long-term vision. Don't rush to grow too fast. Sometimes it's better to consolidate what you have before expanding. Don't go into debt just to grow. Every loan should be backed by solid and responsible projections. If part of your business isn't working, don't be afraid to shut it down, adjust it, or reinvent it. Flexibility is key. Prioritize profitability over volume. Earning more isn't always the same as earning well. Care for your financial health like you care for your physical health. Without it, everything else weakens. Do you want to guarantee your financial success as an entrepreneur? Start applying these tips to your business today. Your business deserves the best, and that includes smart financial decisions from day one. Make a list of your 5 most frequent financial mistakes and post it somewhere visible. It'll increase awareness and help prevent repetition. Remember, a financial mistake can teach you more than a win if you analyze it honestly. Don't fall into the trap of postponing financial decisions. Every day counts, and inaction has a cost. Define what financial success means to you. For some, it's freedom. For others, stability or growth. Your definition will guide your decisions. Learn to say no to attractive opportunities that don't align with your vision or current capacity. Build a support network with others also managing their finances. Sharing progress and mistakes strengthens commitment. Keep a written record of your financial goals and review it weekly. What gets measured improves. Remember, money is energy. Respect it, direct it, multiply it with intention. Create a specific fund for education. Training yourself is an investment that always pays off. Don't underestimate small adjustments. Reducing a fixed monthly expense can save hundreds annually. Remove phrases like, "I can't afford it," and replace them with, "How can I earn more or spend better?" Language affects mindset. Make finances a daily topic, not something you only check when there's trouble. Involve your family if they're part of the business. A clear financial culture at home strengthens the project. Plan by seasons. Each quarter, review what events or changes might affect income or expenses. Think about worst-case scenarios before they happen. Anticipating isn't pessimistic, it's strategic. List your most profitable products or services and think about how to enhance them. Learn about taxes in your country. Don't delegate all of that knowledge. Knowing the basics can prevent penalties. Be clear about your financial values. Do you prefer slow growth with control or high-risk scaling? Finally, remember, no financial advice works if you don't apply it. Action makes the difference. Subscribe to learn how to change your mind and your money to generate wealth.